bigger bubble than 2008? Hey guys, Britt here. Welcome to End Times Bible Prophecy. What am I talking about? Well, the United States housing market is in a bubble bigger than what we saw during the subprime mortgage crisis that led to the great financial crisis. And we're seeing signs that that bubble is beginning to pop. So let's start with this right here. We've looked at this chart before. This is the median household income relative to the median house price. So as you can see, historically 4.5 times a person's income, the median income, would purchase the median home. And during the housing bubble back in 2006, this peaked in March of 2006 at 6.82 times a person's income. As of the latest data from February, we are at 7.37 times the median income in order to purchase the median house or the median house price. So guys, this is unprecedented. We haven't ever seen unaffordability to this degree in any market, including the subprime housing crisis, the housing market bubble of 2006 to 2008. That's exactly what we read in this reVenture article here. It says the United States is in the biggest housing bubble of all time in 2025, even larger than 2006. And they show this chart here. I'll blow that up bigger. This is the Case-Shiller home price index, inflation-adjusted home prices. So this is supposed to accurately reflect home prices relative to on an inflation-adjusted basis. So we're not saying, well, of course home prices are higher today, but so are salaries. No, this shows the degree of unaffordability that we're sitting at right now relative to the 2006 bubble and relative to, well, what was normal times prior to all of this. So let's see what this article says. It says the U.S. housing market has reached an alarming new milestone. According to reVenture Consulting's long-term analysis of inflation-adjusted Case-Shiller data, home prices in 2025 have surged to a record 299.9 on the home price index, more than double the historical average of 145 and significantly higher than the 266.4 peak of the 2006 bubble. It says Nick Gurley, CEO of reVenture App, warns that the U.S. is now entrenched in the biggest housing bubble in history, stating, quote, "The housing market has never been this unaffordable in U.S. history. We're now in the biggest housing bubble of all time, and the only period that came close was 2006 before the big crash." The graph above shows how today's prices have massively decoupled from long-term inflation-adjusted norms, rising 67% since 2012 and far outpacing income growth and rental yields. Gurley adds, quote, "There is no historical precedent for how expensive today's housing market is, and home buyers know it. With prices at all-time highs and affordability at record lows, economists are sounding the alarm. History suggests bubbles this extreme don't deflate quietly, they burst." And again, that's what we saw 15 years ago that led to the great financial crisis. And it says here, the cracks are already showing as price cuts hit key states in 2025. As home prices soar nationally, several U.S. states are already experiencing steep declines, suggesting the 2025 housing bubble may be starting to deflate. According to reVenture App's latest data, states like Arizona, Florida, and Colorado are leading the nation in price reductions. So this isn't the prices of homes sold being lower. This is the asking prices being reduced. It says with Arizona seeing a 36.8% price cut rate, and Florida not far behind at 29.8%. Guys, we're starting to see signs of cracks, and there is more. So let's take a look at this from Bravos Research. It says, warning, housing defaults have skyrocketed. This is unlike anything we've seen in a decade. And they show this delinquency rate of multifamily housing and how high it is here. We'll talk about that in a moment at the end and how important that is. It says the Fed has been on an unprecedented hiking cycle, taking rates from near zero to 5.5% in just 1.5 years, ensuring tight monetary policy in the process. And we've looked in the past at the year-over-year rate of change in this chart is a line straight up, unprecedented in history, going back to the 1940s when they show that data. And we said 2-3 years ago when we saw that pop up, the Fed is not bringing the economy in for a soft landing. They're flying it into the side of a mountain. This will have enormous repercussions, and we're seeing that take place right now. It says high rates have negatively impacted the housing market given the high rate sensitivity of the sector. During the recent hiking cycle, 30-year mortgage rates broke out a key downtrend line. It rose from 2.65% to a high of around 8% and is still around 7%. So historically, these are mortgage rates that are not completely ridiculous. We saw these in the 1990s. We saw much higher mortgage rates in the late 70s, early 1980s. But the problem is the housing market was priced for affordability at 2.6%. So going up to 8% is an enormous difference. It would be probably the equivalent of making rates 20% from where they are right now. It says elevated rates made the housing market very unaffordable. Home buyer affordability fell to the lowest level in 35 years and still remains at very low levels. Mortgage demand also plummeted as high borrowing costs caused demand destruction. Rising unaffordability plus high inflation put pressure on consumers who has started defaulting rapidly. The delinquency rate for multifamily housing has hit levels unseen in a decade. And so let's look at what this chart means right here. So we see these rates at the peak of the great financial crisis. This is 2008, 10, 12. But notice how they peaked then after the economic recession occurred, because this gray bar we see here represents the economic downturn, the recession that we know as the great financial crisis. Here we have the COVID pandemic recession, and yet we're already at levels last seen during the great financial crisis, and supposedly we aren't in recession already. I think in due time, the revisionist historians will come out and say, oh yeah, we were in recession then, but now they're telling us everything's fine. Guys, this is a bad sign. What does it think about the defaults that we see across, housing? What does that mean for banks? Remember, we've looked at this chart for quite some time as well. This is from the FDIC, the Federal Deposit Insurance Corporation, and their quarterly reports. This is unrealized gains or losses on investment securities held at U.S. banking institutions. Now, again, these are unrealized losses, and they'll say, these aren't real losses. They haven't been realized, but right now, the banking system's sitting on just short of $500 billion in unrealized losses, and they might say, well, this isn't as bad as the, $750 billion in losses from 3 years ago or 2 years ago. But I want to point out, this little blip over here was the great financial crisis. And so this is based on mostly just treasuries, U.S. treasuries and mortgages that people are still paying on. So the interest rates have gone up. That means the value of those mortgages that people are making payments on goes down in the resale market. But that's assuming they're paying those mortgages. And if they begin to default, what does that mean? So what are the repercussions for the banking system as we see housing revert to the mean, as we go back and see, well, this chart, if this 7.36% times income goes down to where it was in the past, 4.5%, where it went after the great financial crisis, 4.7 or so, 4.78, it looks like. That's going to lead to a 20-30% decrease in median housing prices as people are defaulting, as foreclosures take place. What does that mean for bank balance sheets? It means, well, the banks are in trouble, is what it means. And unfortunately, we're not even talking about, the only bubble isn't the U.S. housing bubble, even though that's the worst ever. Remember, we put this article out back in January about the stock market. Biggest speculative bubble since 1929. We've seen them come down from the highs of over speculation, but the U.S. stock market is still overvalued to a massive degree. And so what happens when that bubble bursts as well? What are we looking at in the economy? And it will, guys, because remember, let's revisit this because some people have forgotten. So we're looking right now at a chart of the largest percentage increases and decreases in the S&P 500 index in history. So you don't want to look at point gains. The media likes to talk about, well, it was the largest point gain or the biggest point decline in history. But we're always going to have that as we go forward and the index grows, hopefully. Percentage increases and decreases is far more relevant. That's how you compare the past to the present. And over here in green, we have the biggest one-day percentage gains in S&P 500 history. And on the right, in red, we have the largest percentage decreases in S&P 500 history. Both sides of this chart, the left and the right, the green and the red, have something very much in common. 4 time periods dominate both sides of this chart. Both sides, the dates where these percentage gains and losses occurred, all occurred during 4 time periods. We have the Great Depression, we have the Great Financial Crisis, we have the COVID pandemic decline, and we have Black Monday 1987, which was the biggest one-day decline in U.S. stock market history. And due to regulations, circuit breakers they've implemented, that will remain the largest one-day loss in U.S. stock market history. But we see over on this side, it's the same time periods, 1987, the Great Depression, 1929, the COVID pandemic, 2020, the Great Financial Crisis, 2008. But notice this area right here that I put in red. There's one outlier. And you could say, well, it isn't just those 4 periods, Britt, because, and all 4 of those periods were what we would call stock market crashes or bear markets. But there's one period tied for the 8th biggest up day in history, April 9th of this year, just 2 months ago. And so you could say, well, so much for that, Britt. This disproves what we were just talking about. Does it? Or is it foreshadowing what is to come? History tells us that we would expect to see 2025 dates on this side over here and multiple dates on both sides for 2025, meaning this is telling us that a massive stock market correction is coming this year. That's what I would take out of it. Could it be an outlier? It could. But again, we stated in January, this is the biggest speculative bubble since 1929. It will end in similar fashion. That's where all of this is leading, guys. The biggest U.S. housing market bubble in all of history, the biggest U.S. stock market bubble in all of history. Where does all this lead? Well, it leads to financial crisis, plain and simple. And in the midst of that financial crisis, they're going to roll out a financial system to trap us all. A financial system that includes central bank digital currency, tokenized assets, digital IDs. Guys, that's where all of this is headed. So if you want to know what comes next, I'll pin a link at the top of the comments to all these articles we just looked at so that you can see where this goes, so that you can see why we're in the biggest speculative bubble, why it's going to lead to financial crisis, and what they're going to push us into. Because, guys, we are on the precipice of, again, the greatest economic crisis and the greatest financial crisis in the history of the world. We see all of these things, they're the worst they've ever been. And you think, how have they not broken yet? Well, it looks like maybe it has, but we haven't fully experienced that drop yet. But then I could also think, well, maybe God is the one holding all of this back, and the rapture of the church is the trigger, the fuse that's going to ignite this crisis. I don't know. It could be, could not be, but guys, one way or another, this crisis is coming. That's what the data tells us. We're seeing it over and over and over again. And the longer it takes for this to play out, the longer it takes for this bubble to burst, the more they can inflate it, the worse it's going to be on the other side. When we see it spiral out of control, they lose control of it. So let me know what you think. Leave your comments below. God willing, I will see you on Monday.